property sector strategist at FNB. Thank you very much for joining us.
Hello, Colin.
All right, let's take a look at it this way. If interest rates are going to be kept on hold, what factors are going to be considered?
Well, I think it's, firstly, if we look at CPI inflation, the inflation target is 3 to 6%. That's the main target of the Reserve Bank. If we look at CPI inflation, it is slightly outside the target range at 6.1%, but it has slowed from 7% a few months ago. So it's back to near the target range. The repo rate is positive in real terms. In other words, it's above the CPI inflation rate at over 7%, which is desirable. That's what the Reserve Bank wants. And the rand, which is a bit of a forward-looking indicator of imported inflationary pressures, is behaving reasonably well since a few months ago. So there's nothing really alarming for the Reserve Bank on the inflation front. Coupled to that, the economy is very weak, and that means that homegrown inflationary pressures aren't very likely. So there's nothing too alarming for the Reserve Bank. And then they will also consider, although it's not their main target, they would consider the weak economy and say, and a consumer that's not in a good space at the moment. There's rising financial pressure. So there's really, I think they'll probably be thinking to themselves, we've probably done enough for the time being to keep inflation under control. Further hiking at the moment, this week, would probably start to cause unnecessary pressure.
Well, looking at the argument of the Reserve Bank late last year that it was best to increase interest rates so that they can mitigate the future risk in case the Fed could increase interest rates, then South Africa should rather be now on the ball when the Fed could increase, that they don't have to have, like this impactful and sporadic increase because of the exogenous factors. Now, at the moment, if we know that interest rates are going to be increased later on in the year, one would argue that why don't you just increase them now so that we deal with the third quarter or the fourth quarter later on with its own dynamics?
Well, one doesn't know for sure whether it will be increased later in the year. We expect one further interest rate hike late this year. But, that may or may not materialize. We'll see. I think it's important for the Reserve Bank to have moved slowly. And that was the good thing. I look at the consumer. And, the Reserve Bank uses interest rates to get the economic fundamentals right in South Africa, to dampen credit growth, to keep money supply under control. It's through those mechanisms that it influences inflation. And to proactively improve those fundamentals is not a bad thing, because you can do it at your own pace. So they started 2.5 years ago with rate hiking and moved slowly. Yes, the financial pressure has increased as a result, but the slow moving has allowed households and the economy in general to adapt to a certain extent. So the pressure hasn't been unduly bad. And to now, at this stage of the cycle, where we may be at the top, maybe move even slower, if they still are going to hike, is not necessarily a bad thing. The argument of, well, if you want to hike, just why not hike now? I think that's some people do have that argument, but I think that's misunderstanding how long it takes the economy, how long it takes consumers to adjust. The slower, the better, if you can get it right to move slowly, I think.
Now, talking about the consumer, you say that the gradual rate increase has done a lot good for them. How so?
Yes. Well, back in around about 2013, I think the consumer was just starting to get a little bit excited. A few years ago, we had strong retail sales growth, interest rates were low, the housing market was picking up, and the risk was there that the consumer just started to get what I call over-exuberant again, and then started to grow their borrowing at a stronger rate, which would lead to the start of a renewed rise in the debt-to-disposable income ratio. Now, household indebtedness in my books is too high, so that debt-to-disposable income ratio has to keep coming down. It started in 2008 coming down, and it needed to continue. And I think that by just starting to gradually raise the rates, it just kept the consumer a little bit cautious, kept the lending institutions maybe a little bit cautious, kept the housing market from getting overexcited and just kept that indebtedness ratio coming down. And in the longer term, a lower debt-to-income ratio is a very healthy thing for the households.
Okay, now, John, my time is up right now, but I wouldn't want us to go without talking about this major concern about the IMF's growth forecast that has been now revised to 0.1%. What is your view regarding that? And one would ask, what are the most critical issues that we need as a country to look at as the elements that have to be put in the intensive care unit so that we get the country out of the economic doldrums?
I think that, well, yes, the IMF 0.1% forecast, and most of our forecasts are pretty bleak. Unfortunately now, the hard work has to be done. You know, you can't just cut interest rates anymore and hope for massive growth. It's about education and skills development. That's a long-term process, but we really have to start that urgently. And of course, in certain sectors, getting a healthy competitive environment where the state regulates competition, but you get a healthy private sector involvement and competition to create strong sectors, for instance, the electricity generation sector, perhaps. Getting the structures of certain industries right, which may be a drag on economic growth. Competition, I believe, drives human performance up.
Right, I guess it's another debate for
that's
another
day.
A
long debate.
No, don't you worry, we will be on the ball as soon as the time is right to talk about it. Right, John Loos, household and property sector strategist at FNB, talking to us about the possibility of the Monetary Policy Committee meeting that may decide to leave the interest rates unchanged later on this week.